all of you in this context. Question number 22, students. So I've identified set of questions, the comprehensive list which is there, the big questions. In that, question number 22. Question number 22, students. So question number 22, students, all of you. B Supply Private Limited. Aishwarya, Geeta. B Supply Registered Private Limited is registered as a manufacturer of auto parts in Kolkata, West Bengal. The company has a manufacturing facility registered under the Factories Act 1948 in Kolkata. It procures its input indigenously from both registered and unregistered suppliers located within as well as outside West Bengal, as also import some raw material from China, students. Now be careful, students, here. If he is importing the raw material from China, then accordingly, in that case, there would be an IGST impact that would be felt. And if it is an IGST impact that is going to be felt, then obviously we will be getting the ITC of the IGST in this regard. The company reports the following details for a tax period. Raw material 3.5. Now see, students, how they have presented this particular question. It is just like a profit and loss account. They might give you a P&L account and you have to analyze for the sales side. It will be your output supply, and on that there would be a GST. On the debit side, if you see, all the expense item would be there, and on that expense item, students, you will have to take up the decide about availing the ITC. So that is the form of the presentation that they have done. How they have done it, receipts and payments is what they have put across, the way the format of the P&L goes in this context. So therefore, let's have a look. Sales is 15 lakhs, so therefore it will be having an impact of the IGST on it. Raw material, consumables, transport charges. Now, raw material, consumables, fine. We will have to see what are the further information which is given on that. Transportation charges for bringing the raw material to the factory. So that also we have to see this through the GTA. Then in the GTA, if they have gone with that 5% rate of GST on the GTA supply, then there will be a reverse charge mechanism. Because if the GTA goes with the forward charge, then it becomes around 12% or so. So therefore, if it is a reverse charge mechanism, then the rate would be at 5%, on which the recipient, which is the company over here, will be the one who would be liable to pay the GST by by electronic cash ledger account. Now, transportation charges, therefore, we have to see what are the other information. Salary paid to the employees on the roll. Salary, any case, it's not outside the scope of supply, and therefore no GST would be charged. And if no GST would be charged, there is no further any deliberation on ITC, because GST is not charged since it is not a supply. Premium paid on life insurance policy taken for specified employees. So, to start with, it is blocked as far as 17.5 is concerned. That is what we do know. Audit fees, fine, GST would be charged. We will take the ITC. Telephone expenses, bank charges. We have to see further information of the same. All the above amounts are exclusive of all kind of taxes wherever applicable. However, the applicable taxes have also been paid by the company. So they have also paid, the company has also paid wherever it is applicable. So we have to see on those lines based on the information given below. We have to see which are the cases where the company has paid the taxes. Further, following additional details are furnished by the company in respect of the payment and receipts reported by it. Additional details, just like your income tax question number 1, total income question. First they will give you the net profit, and thereafter there are additional information that comes forward. Same is also the kind of a presentation over here as well. Point number 1, raw material amounting to rupees 0.8 lakhs is procured from Bihar, whereas this is in Kolkata, West Bengal. So obviously there would be an IGST. And rupees 1.5 lakhs is imported from China. So again there is an IGST on that. Basic custom duty 0.15 lakhs, social welfare charge 0.015 lakhs, and IGST, this is what you will be getting the credit, are paid from the imported raw material. Remaining raw material is procured from supplies located in West Bengal, so CGST, SGST. Out of such raw material worth of 0.30 lakhs is procured from unregistered supplier students. From unregistered supplier. The remaining raw material is procured from registered supplier. The remaining raw material, students, is procured from registered supplier. Further raw material worth 0.05 lakhs in this case. 0.5 lakh, students, in this case. Purchase from registered supplier located in West Bengal has been destroyed due to the seepage problem in the factory and thus could not be used in manufacturing process. So therefore, we will not take the ITC in respect of this portion. So we have to make a small statement about the total raw material given in the P&L account, and then start bifurcating that okay, this much amount is from Bihar, this is from China, this is from unregistered supplier, and then 0.5 has been destroyed, and then the balance would be CGST and SGST. Now over here, students, some point I just need to tell you in this context. Although there is not much deliberation of the reverse charge mechanism on the goods, but still it will be helpful for you that as far as the goods is concerned, students, if I am procuring the specified goods, not all the goods, students, be careful and mark my words. If you are procuring specified goods from an unregistered supplier, from an unregistered supplier, then in that case, reverse charge mechanism is applicable, wherein the recipient of that goods will be liable to pay the GST by cash. Now you will say, sir, which are those specified goods? There is a list of 3-4 items like cashew nuts, betel nuts. Then there is a tobacco, and these are the items which are being there. Tobacco is there, BD is there. So those are the kind of products: tobacco, BD, cashew nuts, and thereafter betel nuts. So those are the product. Scrap is also there. So those are the products wherein if you are procuring it from the unregistered supplier, and you yourself are a registered supplier, then there is a reverse charge mechanism that is under the play, and therefore the GST will have to be paid by the supplier, by the recipient. But here if you see, they have not mentioned about the goods auto parts. So obviously auto parts are not covered under the specified charge in there's auto parts are not covered under the specified goods, and because it is not covered under the specified goods, Therefore, the reverse charge mechanism will not apply. And since it is supplied by whom? Who is the supplier in this case? The supplier in this case is an unregistered dealer. In that particular context, no GST will be charged. And since no GST will be charged, there is no question of taking or availing any ITC. Consumables, the second debit item was consumables. Second debit item, first was raw material, second was consumable. So the consumables are procured from registered supplier located in Kolkata and include diesel worth 0.25 lakhs from running the generator in the factory. Now students, just think of it. Diesel comes under that 5 petroleum product, and in the context of 5 petroleum product, the levy of the ITC is postponed. So presently there is no levy, and there is no levy. So the supplier of diesel would not have charged in his invoice the GST on the supply. And since no GST is charged on that 0.25 lakhs, therefore there is no question of claiming any ITC. You have to focus on the balance amount, not on 0.25, but on the balance amount. That we will be claiming the the ITC on that. Now see over here, friends. Transportation charges comprise of zero point 0.6 lakhs paid to GTA in Kolkata, and so this is intrastate, and zero point 0.1 lakhs paid to horse pull cart. So students, there is an exemption part in this case. Students, in the exemption particular chapter, you will find that transportation of goods other than through GT and courier, and that transportation is intra-supply. That transportation, students, is intra-supply. Okay, so if there is a transportation of goods other than by GTA and by a courier agency, and the transportation is intra-supply, then such particular transportation services. So in a way, in that context, we can say that this particular 0.10 lakhs out of the total transportation charges will not have any GST because it is exempt. And since it is exempt and there is no GST on the supply, therefore I also cannot take up the ITC. Let's see what about the remaining particular part of the transportation charges. So here they have told you GST applicable on the service of the GTA is 5% under the reverse charge mechanism. So 5% rate comes under the reverse charge. So therefore on that 0.6 lakhs of the value, the 5% would be the reverse charge mechanism. So please understand, friends, be careful. This is 5% the CGST rate. So equally would be the SGST rate as well. 5% and 5%. So it becomes how much? 1.5 lakhs of 0.15 lakhs. So 0.15 lakhs of the amount will go towards what, students? 0.15 lakhs of the amount, students, will go towards the CGST, and equally 0.15 lakhs of the amount will go towards the SGST. And that has to be paid by reverse charge mechanism. So it would have to be paid by the recipient in cash. And as I told you, after it has been paid in cash, it will go to your ITC credit ledger, electronic credit ledger. Point number 4, life insurance policy for specified employees have been taken by the company to fulfill a statutory obligation in this regard. Statutory obligation, students. So if it is a statutory obligation, then and only then the ITC in respect of that is allowed. Audit fees is paid to Mrs. Goel and Company, a firm of chartered accountants registered in West Bengal, for the statutory audit for the preceding previous year. So ITC would be allowed in any case. Point number 6, telephone expenses pertain to bills for landline phone installed at the factory and mobile phones given to the employee for official use. The telecom service provider is registered in West Bengal. So again, in respect of that also, you will be eligible to avail the ITC, not an issue. Bank charges are towards the company's current account maintained with a private sector bank registered in West Bengal. So therefore, again, for that also no issues. Had it been interest on that loan, deposit and advance, that is what the amount would have been, interest on loan, deposit and advance, then we would have said that it is not taxable because it is exempt supply. The breakup of sale is as under: sale in West Bengal 7 lakhs, sale in state other than West Bengal is 3 lakhs, and export under LUT, students, is 5 lakhs. So no GST. But if there is no GST, students, on the export, but can you avail the ITC on the corresponding inward supply? And the answer is yes. So all we know, it is zero rated. So if there is any corresponding inward supply, and on that inward supply, students, there is a GST charge, then the same is eligible for ITC. But so far we don't have any information of that. But just to tell all of you that this is how the position is, so just bear that particular point in mind. The opening balance of ITC with the company of uh, with the company for the tax period CGST. So therefore, this will be in the ITC statement that you will prepare for that particular period. First would be the opening balance, and then all the items that we've discussed will fall one by one. SGST and IGST. Compute the total ITC available. So first, you need to compute the total ITC available with V supply for the tax period, and the net GST. Net GST would be what? Students, be careful. In that total ITC, you will also include that GTA, because that is a reverse charge. The GTA, that is through the reverse charge. So you will add even that particular item in that particular statement. That is point number one. Point number two is about in the net GST payable from the electronic cash ledger. So how you are going to do it? From your output supply, whatever is a CGST, SGST, and IGST, you will calculate that. Then the ITC that you already have calculated in the statement, you are going to reduce that ITC. And on the net amount, students, on the net amount, you will add what? The GST which is supposed to be paid under the reverse charge mechanism. The GST which is supposed to be paid under the reverse charge mechanism. So you will add that amount with the net amount which is payable through electronic cash ledger. So that will give you the total amount that you are supposed to pay through the electronic cash ledger. Is that point clear to all of you students? Every one of you? So this is how the things goes in this particular regard. Students, I just want all of you that immediately after the lecture gets over, please do ensure to solve, even after discussing, students will do some silly mistake. That is for sure. Now you know all the adjustments and all. We have discussed each and every point. But as I told you, students, statements are also known to you. Total ITC available, you start with the opening balance, and each of the line item of debit side, you will check that along with the additional information, and then on that basis, you will start putting up the particulars CGST, SGST, and IGST. And then you'll start adding up each one of them respectively. Okay. And then you'll get the total ITC which is available for that period. And then thereafter, as I told you, you will have to make a statement of the net GST which is payable. First would be your GST on the output supply, and then again CGST, SGST, and IGST. You'll put that, and against that, then you will reduce what? The ITC which is available. Now, when you reduce it, students, at that point of time, I have taught you that first you will consume entire IGST against first IGST liability, thereafter CGST or SGST liability in any manner, in any proportion. In any manner and in any proportion. So first try to consume your IGST. Once that has been consumed, see what is the balance thereafter, and then balance thereafter, you'll use the respective CGST again CGST, IGST, SGST again SGST. And after that, you'll take the net amount which is payable, and on that net amount which is payable, add to that the GTA. The GTA which is under coming through the reverse charge mechanism, for which the 5%, I think already we have discussed 0.15 and 0.15 of CGST and SGST would be added, and then you will get the total amount that you are supposed to pay through the electronic cash ledger. Is that point clear to all of you students? The statements are also clear in your mind. But immediately after the lecture is over, students, please do make this statement, this particular statement, and I'm telling you, still there would be a silly mistake. So we need to identify where you people are doing the silly mistakes. That is the most important activity. Just try to make a normal this thing. You'll finish it off in 5 minutes. But please do this exercise. I've discussed each and every particular line item as far as the question is concerned. 23 students, unfortunately or fortunately, whatever you have to say, is also the same question which got. But the 23 question is a smaller version. 22 was a larger version. 23 students is a smaller version. So the smaller version of this 23, this is a smaller version, you can skip it because the same thing has been covered over here as well. But here there are a couple of points, students. Just let's still discuss this particular 23. I'll just still discuss one or two line item which is quite new, but as such not new that you don't know it. New for the today's class. We already discussed this line item in the earlier lecture, but just let's finish it off. ABC Company Limited of Bangalore is a manufacturer and registered supplier of machineries. It has provided the following details for the tax period: inward supplies, health insurance of factory employees as required by the Factories Act 1948, So students, in this case, we have to just as required. So it is statutory because required by law. Therefore, the same particular point will emerge in this case. Second point is raw material for which invoice has been received and GST also has been paid for full amount. Students, be careful here. But only 50% of the material has been received. Remaining 50% will be received in the next month. So on this, the GST paid is 18,000. Now this GST paid of 18,000, which particular month you are going to claim the ITC? The next month. You cannot claim in this current month. Entire, you cannot take proportion also. Works contractor service used for installation of plant and machinery, students. So we know that works contract service is blocked unless the same is used for providing the same outward supply, which is the works contract supply. Then only the ITC is available. And the second exception is towards plant and machinery. Towards plant and machinery, students. So if it is towards plant and machinery, will that be allowed? And the answer is yes. So I think this is a different question. The question there was a different one. Purchase of manufacturing machine sent directly to job work premises under the delivery challan. Students, if you deem receipt, one of the conditions, students, you should, under section 16, is that the material or the goods should be received. Only then you will be eligible for the purpose of availing the ITC, isn't it? Now, here, the goods are directly sent to whom? To the job worker premises. Now, as the provision says that if the goods are directly sent to the job worker premises under a delivery challan, then it is deemed to have been received. By whom? By the recipient. So it's a case of a deemed receipt. So there are two types of deemed receipt, students, which is there under the ITC. One is the bill to ship to. One is the bill to ship to. Example which we've discussed in the last lecture also. So there also there is a deemed receipt by the recipient. Second is this one. If the goods are being directly sent to the job worker with under a delivery challan, then it is deemed to have been received by whom? By the recipient, and whether the ITC can be availed with respect of the same, and the answer is yes. Purchase of car used by the director exclusively for purpose of business undertaking doesn't matter, it is blocked. Outdoor catering service availed for business meeting, no, not allowed. Only two exceptions are there. What are the two exceptions, students? Exception number one, if it is made for the similar outward supply, which is outdoor catering, or it is forming a part or element of composite or mixed supply. So only then the ITC in respect of inward outdoor catering services will be eligible for the purpose of availing the ITC. In this case, the exceptions are not getting triggered and hence no ITC can be claimed, it is blocked. ABC Company Limited also provides services of hiring. Provides, so it is an output supply. They are providing, na? So for therefore it is an output supply. So also provide service of hiring of machine along with this is important. Na? So therefore along with means composite supply or mixed supply as the case may be, we have to see further. So along with manpower for operation. As per the trade practice, machines are always hired out, along with operators, and also operators are supplied only when machines are hired out. So can we therefore say it will be a case of a composite supply? And if it is a case of a composite supply, therefore the GST will be charged in this particular context. And then the GST would be classified under which category of supply? So the category of supply would be supply of the machine on hire. Supply of the machine on hire, that is a category on which the composite supply would be classified and the applicable rate would be picked up accordingly. So hiring of machine, the value has been given, and manpower, the value also has been given, but the rate that you're going to apply, students, would be of the hiring of 12%. Output supply would be, ignore CGST, SGST, so we don't have to make three statements. We only have to make one statement of the GST and that should be it. Compute the amount of ITC available as also the net GST payable. So two things. This statement is much simpler because here you have to only make particulars and GST credit for ITC to be taken, and for the net GST payable, particulars and the GST, and on that you will first put across the output supply of this value on that 12%, and thereafter reduce with the ITC which we have discussed just, and balance would be the GST which is payable through electronic cash ledger account, and in this case there is no reverse charge liability, therefore no further additions has to be made in this. I hope that all of you are clear with this one. So this only you have to read it out because this is a small and simple question. So only one reading will suffice to this case. Okay, only one reading, students, will suffice in this case. I've already discussed it, so don't have to read it. But that previous question, students, at least once you need to solve it. Because as I told you, you'll make some silly mistakes or the other. Now, friends, just have a look to this one. Now, this was what I was talking about, question number 22. This question number 24 is similar with that of question number 22. That is the point. So, if you see, Pari Limited, Jodhpur, Rajasthan is registered manufacturer of cosmetic products. Pari Limited has furnished following details for the tax period. Supply in Rajasthan, intrastate. So, therefore, CGST, IGST on the output supply. Supply in state other than Rajasthan, IGST. Export under LUT, no IGST, but the corresponding credit would be available on the inward supply. Details of the expenses, raw material purchased from registered supplier located in Rajasthan. So you will be getting the IGST, CGST, and SGST credit. Raw material purchased from unregistered supplier located in Rajasthan. Unregistered supplier. Now you tell me in this context. He's a manufacturer of cosmetic product. Whether the reverse charge mechanism will that be applicable? And the answer is no. I already told you which are the goods which are covered for the RCM purpose. So therefore, there is no such particular case of a reverse charge liability that will arise in this particular case. So raw material purchased from unregistered supplier, no GST will be charged by the unregistered supplier in the invoice, and hence no credit can be taken. Raw material purchased from Punjab. So therefore, in this context, you will have the IGST credit that can be taken. Integrated tax paid on raw material imported from USA, you can take the IGST credit. Consumable purchase from registered suppliers located in Rajasthan, including the high speed diesel, valuing rupees 31,000 for running the machinery in the factory. So, students, in this particular context, for the high speed diesel, students, tell me in this context, for the high speed diesel, whether you will be eligible for the ITC. The answer is no, same reason. And then for the balance amount, whether you can avail the credit, yes, CGST and SGST credit. Why CGST, SGST? Because it has been procured from supplier in Rajasthan. Procured from the supplier in Rajasthan, therefore you will be eligible for CGST and SGST credit on the balance amount. Why? 31,250 of that amount represents what? Represents towards procurement of diesel, on which there is no levy of GST. Point number 6, monthly rent for the factory building to the owner in Rajasthan. So therefore, this will be having the CGST, SGST credit can be taken. Yes. Salary paid to employees on roll, not a supply. There is no question of charge of GST, hence no credit can be taken. Premium paid on the life insurance policy taken on specified employees. So this is to fulfill a statutory obligation. CGST, SGST credit can be taken. Okay. The life insurance provider is registered in Rajasthan, so therefore CGST, SGST credit can be taken. All the above amounts are exclusive of this. So this is same question of 22. You can skip this question. Just I discuss this particular point so that in a different form this question is appearing, but with a similar content. So no new thing which is there in this regard. Now, students, we come to other than that. I think now what are the balance question which is there? Let's take the next comprehensive question, which is number 37, students. Rest of the question, students, we have done it. So I'll come to, and other questions are in respect of the exam supply, for which, as I told you, I'll take across one separate session on the exam supply. Please take this particular part, all of you. Question number 37. One more important point, just ensure that in these kind of a statement that you have to prepare, when you have to calculate the net GST liability. You have to calculate the net GST liability also. So there are two types of question that we are finding consistently in every lengthier questions. One is to make a statement of the ITC credit available for that period, and second is to compute the net GST payable. And when there is a net GST payable, we first use the entire IGST, and the balance IGST credit is used on CGST and SGST, and that can be used in any manner and in any proportion. That is also we have learned. So my humble suggestion to all of you would be, please do also make a note of that in your answer. What is the note? That IGST credit first will be adjusted against the IGST outward liability. Balance IGST credit thereafter can be used against the GST liability, CGST and the SGST liability on the outward supply in any manner and in any proportion. This statement you need to write it, students, in this kind of a question. Always make a note of it, students. Please make a note of it, that this particular note has to be put up in this kind of a question where you are supposed to calculate the net GST liability, and there is a IGST credit which you are using to adjust against IGST liability as well as the CGST and SGST liability. I hope that all of you are clear with this one. Every one of you. Fine with that. Now, students, let's take question number 37. Question 37, students. This is a good question, students. Sukhdev is a mining engineer. He has crossed the threshold limit for the registration under the GST law and is duly registered in the state of Maharashtra. He effects the following transactions in the month of March 2019 and wants you to compute the tax payable in cash. What he wants you? Compute the tax payable in cash. Now, if this is the only question, students, which is there, again, invariably, students, although they are not asking you directly to prepare the ITC statement available for that period, but you have to make that statement. Because when they are asking you a direct question that compute what is the amount of the GST that will be payable by cash, we will require that statement of the ITC which is available for that period. So invariably you will make that statement first, and then that statement will be used in that final question, which is about calculating the net GST which is going to be paid in cash. Is that clear to all of you? He has filed bond or LUT to claim the benefit from the zero rate supply. The outward liability is nil, but the corresponding inward supply on that, whatever is the GST charge, on that he can avail the credit. The following are the particulars furnished by him. Let's please refer this one by one, students. This we have already discussed earlier when we were doing the chapter of supply. You will find that these items are now being tested over here. Let's have a look. Point number A. Sukhdev, who is a supplier in our question, being an operating member in mining and exploration, being, being an operating member in mining and exploration services at Mumbai High, has provided certain services to the joint venture in which he is also a participant. So he has provided to that AOP. AOP is the one who is doing the joint venture. So this is my supply to whom? To the AOP. So therefore supply to the AOP. He believes that the consideration received from the JV is cost petroleum and not taxable. No, this is not a cost petroleum. Cost petroleum would be coming from the government when they give you the petroleum silt to explore further. You remember this discussion, students, already we had it earlier, that when the government is providing you the petroleum split for the purpose of the exploration, then that is towards your share for exploration on that particular area of the sea. So that is something that it is not something that you actually are providing any service for which you are getting any consideration. It is something as per the agreement that look, this is what primarily you are supposed to use it, and thereafter against that whatever is the petroleum that has been crude petroleum that is purging from that particular exploration, some portion goes to the government, which actually you are giving it to the government for one reason, to provide you what? To provide you the exploration of that particular area. exploration for that particular area. So that we already discussed in the chapter of supply, that this is not a form of a consideration in this context. So therefore the arrangement that is made between the government and the explorer who is exploring to find out the petroleum silt. So therefore the arrangement which is made, as per the arrangement, I am getting the share of that area to explore it, against which any crude petroleum which is being found out, the same will be shared partly with the government, and thereafter the remaining part I will be using it for my commercial purpose. So therefore that sharing particular part of the petroleum silt with the government is not in a consideration for your supply. In fact, there was no supply at first place in this context, and that is the reason why we discussed in the chapter of supply already this particular concept, that this will not attract any chargeability. This will not attract any chargeability. This was already discussed in length and in breadth in our supply chapter, and you will find it reference in this question also of that item. But over here in the JV, you cannot say that this is a consideration received from JV is a cost petroleum and not taxable. That could not be done. This, you have been providing a certain services which you have given it to whom? To the AOP, not to the government, but to the AOP, and that is the reason why this supply will be very much attract to the charge, and accordingly the GST will be chargeable in this case. Point number B. He has purchased certain machinery from outside the state to render services to the JV at the Mumbai High. So this is a corresponding inward supply. And on that, whatever the GST, this it will be IGST. That IGST will be subject to the ITC credit. Thereafter, he has obtained legal opinion from the local firm of advocates to enter into the contract with the JV for providing services to it. Legal opinion, students, in this context, again, this will be what? This is a legal opinion, students, by the way, not a lawyer service. So on that particular point, students, in this particular context, the GST will be charged, and accordingly you can avail the ITC. He has obtained accommodation from the state government to locate his office close to the seashore. Doesn't matter. In this context, you will have the context of this one, and accordingly the GST will be charged. Point number E, he gets a portion of the petrol. This is the point which I was discussing. This point. He gets a portion of petroleum silt as a part of compensation while exploring the petroleum reserves in Bombay High, which, as per the contract with the government, is a part of the cost petroleum. So, this is not a consideration, primarily. This is just a share, primarily, for which you are supposed to give it to the government, not in the form of any consideration that you are receiving. In fact, that's a share. Consideration you will receive from a third party when you actually will supply the petroleum silt to a third party. This is a share that you have to part away to whom? To the government as per the arrangement. And that is the reason why we have discussed that this will not be in the form of a consideration, and accordingly will not be a supply under section 7(1)(a). And because it is not a supply, therefore this will not be chargeable to GST. That is what you are supposed to write a note on that. He sells the petroleum silt to a SEZ developer. So students, be careful. Huh? He sells the petroleum silt to a SEZ developer in Mumbai. Now, this is a third party supply. This is very much a supply. Now he is selling it to a third party. But if he is selling that petroleum silt to a SEZ developer, then you know any supply which is given to the SEZ developer, on that it is a zero rate supply. And if it is a zero rate supply, on that, therefore there will not be any GST that will be charged in this kind of a outward supply. That is what this particular point number F is all about. So therefore no GST will be charged in this regard. Okay, but if supposedly they would not have given SEZ developer, say any third party, then yes, it is a supply. Even in the case of SEZ, it is a supply. But only difference that if you are doing SEZ supply, if you are doing a supply to SEZ, then it is zero rated as compared to any other third party. It will be subject to the charge of GST. Anyway, point number G. Consideration is received towards transfer of tenancy right. This also we have discussed. Transfer of immovable property versus transfer of tenancy right in the immovable property are two different things. If it is a transfer of immovable property, it is not neither a supply of goods nor a supply of service. That is what we have discussed in the supply chapter. But if it is a transfer of tenancy right in that immovable property, then on that, student, will that be charged to GST? And the answer is yes. Point number H. On violation of terms in production sharing agreement, Sukhdev has to pay liquidated damages to the government. Liquidated damages, students. We have discussed this particular part earlier. In the last lecture also this particular point came about the chargeability of GST so far as the liquidated damages is concerned. Okay, last lecture also we did the same particular point on liquidated damages. I discussed this particular point now 3 times. This thing, last lecture plus the original supply topic, we discussed this particular part as well. Coming to the next one, he has assigned the right to collect royalty on behalf of the Maharashtra government as excess royalty collection contractor. He has noticed that the mining leaseholder have short paid 2 lakhs as IGST from what has been exempted to him under the assignment. Students, please be careful on this royalty particular part. On mining, there is a reverse charge mechanism, students. There is a reverse charge mechanism. Therefore, I'll just put across those who are not aware of the RCM. This particular point will be put across in this context. This particular point will be put across in this particular context. He has sold self-fabricated machinery through his agent in Mumbai. That has been used for 2 years, the value of which is not available in the open market. Please remember, in this case, he has sold self-fabricated machinery through his agent. Valuation topic. Can anyone tell me what is the valuation that will be taken in this case? Let me recall. What would be the value that will be taken in this case? Point number J. This is a valuation topic. Let me see how many of you can recall. Adjustment number J. Rule number 29. Ashwar, what is the answer for this one? What is the answer? What is the value that will be adopted in this point number J? Quickly, students, 30 seconds. Ashwar? Yes, correct. Open market value or 90%, whichever is lower. This question, open market value, they have not given. We'll see further if it is given. I do know the question, so I can tell you that open market value is not available. 90% students in this particular context would be available. So 90% of 10 lakhs would be 9 lakhs. The only condition that you have to see for the applicability of this rule is that the agent should be supplying it to unrelated customer. So obviously, in this context, the question itself makes it very clear. You don't have to put up any assumption. The supply is to unrelated customer, and therefore 90% what would be considered over here. Anyway, opening balance has been given, students. That you will pick it up. You will put up in the respective items in this case. Now, students, electronic cash ledger which has been given to you, CGST. Okay, CGST. Although this question is not of that type, but you remember, students, I taught you that if there is already a deposit in the major head and minor head, and you would want to make the payment for some other particular head, then can you use that particular amount from electronic cash ledger balance? The answer is yes. But in this question, unfortunately, that concept is not tested. But just again to revise that particular point, just I told you that in the topic on the payment of tax, that if you have got a balance in the electronic cash ledger amount, that balance, if you would want to pay for some any other minor head or other heads, then the same first you can try to take out from this, then you have to deposit family into that relevant head, and that is how you can make the payment thereof. Anyway, good part of revision, but this is what it is. So it can be used anywhere. It can be used. There's no hard and fast rule. So if you want to use it for CGST, you can use it for CGST. We'll see what is the liability. Accordingly, we'll work it out that way. Electronic credit ledger, this much is there. SGST is there and IGST is there. Now, students, IGST is there 60,000. So obviously, the IGST credit would be first adjusted against IGST liability. Now, the balance portion of IGST liability, students, I will first try to use it for SGST because already the electronic cash ledger has a CGST deposit. So I will leave it that way only. I will not try to first remove it and then add to other head. I will not do this exercise. I will first, what I will do is that IGST credit, I will first try to use it against the IGST liability, and thereafter the balance, if any, I'll try to use it for the SGST, and then CGST. Any case, I've got that particular amount in this context. Please have a look, friends, over here. So, students, over here, competition of tax payable in cash. First is the outward liability, which I have discussed with all of you one by one. Let's see in this context. Let's go through the same. Consideration for service provided as an operating member to the joint venture. The operating member is providing the mining and exploration service to whom? To the AOP. The joint venture is the AOP, and thus what, fruits? Is liable to tax. Point number two: compensation received in form of petroleum silt. This you are receiving from whom? From the government. As per the contract with the government, is a part of cost of petroleum. This is not a consideration. This is what we also have highlighted upon in our explanation. This is not a part. This is not a consideration to the government, and thus it is not taxable. Therefore, no CGST, SGST in this. Sale of petroleum silt to SEZ. This is third party. So although it is a supply, okay, but because it is sold to SEZ, therefore it is zero rated. Had it been other than SEZ, I would have charged CGST, SGST, or IGST as a case may be. Consideration for transfer of tenancy right. Again, CGST and SGST would be charged that way. Thereafter, students, sale of self-fabricated machine, which we have discussed in this context. Value would be 90%, which you people have told just now. On that 9 lakhs, so 10 lakhs was the value, so therefore it comes down to 9 lakhs. On that 9 lakhs, CGST and IGST. So total amount of there is no IGST liability. There is no IGST liability. So what I will do is that IGST credit I will use first against the SGST. So already I have got the electronic uh, cash deposit on the CGST amount, on the CGST head. So I'll use my IGST credit towards the SGST first. That is what I will try to do in this kind of a calculation. GST liability on the inward supply under the reverse charge. Legal service. The legal service chapter, remember, yeah, legal OP provided by a firm of advocate to a business entity. If you remember, students, certain exemption I have given you, certain exemption was in. Just check, students, once the reverse charge notes which I have given you, the topic on supply. Legal service, students, one category is exempt. and all the remaining category of the legal services attracts the reverse charge mechanism. Remember that particular notes which you already have copied down? That was again, I suppose, in which topic which was, I suppose, supply only, I suppose, if I'm not mistaken. In the supply topic itself, you have captured this notes in a notebook in which one category of legal service that is eligible for an exemption, the other category of legal service students was subject to an RCM. So if in your notes that you have made, just check the supply topic, you will find this particular notes already being covered over there. Renting of immobile property, students, in this context, as I told you, students, renting of immobile property, again the reverse charge mechanism is applicable in this case, because who is the supplier for the renting? Only this renting, only this category, students, of renting of immobile property by the government to a registered person. So the recipient is a registered person, yes. Who is the supplier? Government. What is the nature of supply? Renting of immobile property. That is specifically covered under the reverse charge mechanism. Because it is specifically covered under the reverse charge mechanism, therefore, in this context, the liability would have to be paid in cash. The liability would have to be paid in cash. GST and SGST liability would have to be paid in cash. Assignment by the state government of the right to collect royalty. Royalty, I already told you, students, royalty from mining. This context, IGST. This is the IGST context. Therefore, this is from in this context would be the charge that will be applicable. Now, total tax on inward supply under the reverse charge is this much. So, students, one important point of observation. Just I'll tell you this. In this question, students, there are 3 to 4 items of reverse charge liability. Please be very clear about the statement that you have to prepare. One statement is the total ITC available for that period. The second statement, students, is about the net GST liability that you have to pay it in cash. Okay. Now, I told you how you have to calculate a net GST liability paid in cash. First, for the output liability. And against the output liability, you will reduce. Reduce what? Reduce the ITC available. That you will reduce. And then you will get what? The net GST liability that is payable in cash. Now, on that net GST liability payable in cash, you will add the reverse charge liability. Now, up till now, in the question that we have seen, there were only one item or maximum 2 items of reverse charge. In this question, there are 4 to 5 items of reverse charge on which you need to make the payment through reverse charge mechanism. Now, if there are 4 to 5 items, then it is also better that instead of you have the option, students, what you can do is that on the net GST liability, you keep adding further. Further what? Item number 1 of reverse charge, 2, 3, 4, 5. Or you can make a separate statement of what is the liability that you have to pay under the RCM that you will pay it in cash. So if you are not making a separate statement the way it is given in the question, so what you will do is that from the net GST liability, you will add these line items one by one. Okay, that is what you do. Or you make the separate statement the way it is given in the question. It's up to you. Whatever suits you. If I would have been in the position, then I would have not taken the separate statement. I would have saved my time in this process. What I would have done, I would have directly captured in that net GST liability, I would have added 1, 2, 3, and 4. But again, there is no hard and fast rule. It is up to you. So the presentation that has been given over here has a separate statement of the liability to be paid under the RCM. That's the reason why we are discussing out. But if I would have to work out, I would have directly added from the net GST liability 1, 2, 3, and 4. Like that, I would have done it. Anyway, input tax credit, students, opening balance has been given to you. You will take it accordingly, one by one, each and every part which is there. And now on the ITC, students, please be careful. I told you earlier also, ITC students, you will add all that you are paying under the RCM. All that you are paying under the RCM, that will be added, students, in this case. Will that be added? And the answer is yes. Therefore, whatever you have to pay under the RCM, you will be eligible to avail the credit. So you will add on the opening balance plus the other ITC which is available during that period. You will add to that the ITC which is there, which you are supposed to, which ITC that is available under the reverse charge mechanism, because you first have made the payment through electronic cash ledger, and once you have paid it, you will be eligible for ITC immediately. So in that statement of ITC credit, again I'm repeating it, this line item again needs to be added. Which line item? the line item which is to do with the reverse charge mechanism. The total ITC students in this context is 45, 39 and 2 lakh 90,000 students in this context. This is the total amount. Now the computation of tax payable in cash. Now see how we are going about it in this context. First, I need to cover up the IGST part. Outward side, this is only one liability, students. Outward liability, there is only CGST and SGST. And I told you already that I will first use my IGST credit. Here in this question, students, unfortunately, in this question, your IGST credit is so huge that you will be in a position to adjust maximum family students through your IGST itself. So students, I am using first my CGST. Students, see how I am doing it, students. First, I am using, if you see, in the manner I am using this first. Although there is a hard and fast rule, but I am doing a tax planning here. Why I am doing a tax planning? Because I told you already that I have got some deposit which is there in my electronic cash CGST head. Because there is a deposit already there, I will not try to remove it from that and put it in other head. I will rate it that as it is, and I'll use my IGST credit first towards the SGST liability, which is what I'm doing it, and then second with this particular part towards the CGST, and therefore now on the balance part, students, I will use my ITC on CGST. In the That is what we will do it in this context. So in this question, students, therefore the forward charge liability towards outward is 31,000. SGST is fully adjusted, but CGST is still there. 31,000 is still there. And now I'll add my reverse charge liabilities. All the reverse charge liability as per the statement. In this case, it is statement. Otherwise, you will make 1, 2, 3, and 4 in this context. So now the total liability in this case is CGST 58,000. SGST is less. You'll say why SGST is less? Because SGST output liability is 0. CGST output liability was there. And on that output liability, I've added the RCM liability. Therefore, I'm getting this amount higher as compared to the SGST liability. And IGST already is there. Now, students, in this particular context, so students, how you're going to use it? Less 12,000 of the deposit which is there, and the balance you will show like this, students. 46,000, 27. Balance will show like this. I hope that all of you are clear with this one. Mark this question for the LDR, student. Why am making you mark this for LDR? This question number 37. The only particular point which I am marking you for this LDR, two reasons. One is that particular supply chapter get revised one way. More importantly is that because in this question for the very first time we are getting the electronic cash ledger which is already lying in the CGST head, which is already lying in the CGST head. This was first time we are getting this, and because of that, this changes my equation of my ITC adjustment, which I am going to do first with the SGST. Although there is no rule, but here I am doing a tax planning. So first I am adjusting against SGST, and then I am using the balance IGST against the CGST. And that's the reason why you have found that the outward liability SGST was nil. CGST I have to pay some, and thereafter to that I have added further the RCM liability respectively, and then the total has been found, and on the total I'm just going to say that this 12,000 is what already is there, so that 12,000 would be adjusted. I hope that all of you are clear with this one. Please mark this question as the LDR one. This is the first time we are encountering this question. Other question didn't had uh, uh, this level of selection that we have to do about IGST credit to be adjusted first against one. Okay, other question we didn't have that particular level of selection. This liquidated damages, students, unfortunately it came here. We know that liquidated damages, it is not a case of forbearance to act. Okay, so therefore will not have any kind of a CGST or SGST liability in this particular case. So therefore this particular thing will not have any liability. Unfortunately, this has came below, but it should go up. Okay, but let it be. You already know how the things has to be looked upon. So this covers up for this particular part of the question, all of you. Now with that, I think now balance students is only a small questions which are there. I think that this particular part, question number 39 students. Now I think this is the ISD question which I'll do in the next class. ISD question, input server distributor, I'll do it in the next class. The balance question which I can see is a smaller question. Students, I think 39. Just take the homework now. 39. All of you. 39, 40, 39, 40. Please take this as homework. Question number 39 and 40. Please take this as homework. And that should be all. Fine. So with that, students, we are through with this. Please take also question number 41, students. Again, a smaller one. Finish it off this. Question number. So your homework, students, is 39, 40, and 41. Although the chances of this kind of question is very less, because they are very small questions which are there. This is actually from your study mat. I don't find this kind of question actually coming in the examination, but still you do it. Okay. And but before you look into the answer of this, I just want you to refer that question once. First question, question number 22. We discuss the solution. I'm telling you, still you'll make some silly. Okay, you'll still make some silly mistake, students. So we are concluding this session now, students. In this case, with this comprehensive question on the ITC. So LDR, we have identified one LDR from this session that you will have to refer. That LDR happens to be question number 37. In this session, the LDR identified is question number 37. I gave you why I am selecting question number 37. Quickly, in the next half an hour, finish it off. First, solve that question number 29, 22, and just go through 30, 40, and 41. Go through 30, 39, 40, and 41. Okay, that should be all, students. And I'll see you, students, today evening now for the smaller topic, which I'll just let you know in the group itself. Okay, see you then, students. Quickly, just wrap up this particular part, and I'll see you in the evening now.